Question. The volume and gross margin is the real driver for the stock. And really, more than the volumes, we think the gross margins per unit are really what's going to drive the stock. And it's really going to drive the profitability for the organization. And so we look to things like this recent acquisition of Maxwell, which we believe can drive at least 20% cost reduction on their battery packs, which is a huge cost driver for the company as a key strategic decision that they recently made. And really, when you look at the global auto sell-through here with some weak numbers coming out of China, all the tier ones and auto companies lowering expectations for the year, there's some real concerns. Now, on the bright side, what we are seeing is a substantial sell-through in Europe. There were some slightly disappointing numbers in April, but largely on the year, we've been up 40% year over year on electric vehicles, which is a good sign for Tesla. And certainly, they've been performing well over there. So we're watching this very carefully, but we think the guidance is achievable. There's certainly demand there. And the big variable for us that we don't know right now is really the gross margin.
Wait, so Colin, I mean, the stocks and the bonds are hitting new lows. It's been battered, down 40% so far this year, and you're hanging your hat on cost savings for Tesla?
No, we're not hanging our hat on cost savings. We're hanging our hat on the spread between their cost structure, which we think is reasonable in their ability to sell through. And we still think that that's very much intact. The big issue on the stock here is that the company's no longer getting the benefit of the doubt on the market, given the growth in the company, but also erratic behavior from the senior management and a lot of changeover in the last year and a half. We still think that there's substantial demand for Tesla, and that they're still at least 2 or 3 years ahead of all the other OEMs in terms of having ground-up built EVs in the market, and we think consumers are well ahead of where the traditional OEMs are at this point.
Given some of those concerns that we've seen in terms of the track record, do they deserve the benefit of the doubt?
At this point, I think there is some show me to the story at this point. They've put up some very good quarters in terms of generating cash. They had a disappointing first quarter, and so the second quarter we think is incredibly important for them to build back some credibility in terms of the projections on the market and their ability to deliver on the volume.